we'll start, we're going to continue the compliance discussion, talking about grant assurances, and we'll break for lunch and then jump back in, so don't worry, I'm not going to talk all the way through lunch. My email's up here. Again, my name is Melissa Allison. I work at Anderson & Krieger with Dave. My email's here. I'm going to be talking today about some federal guidance documents, some statutes, anything you see cited up here. Feel free to email me, ask me for copies. Same with the presentation. I'll also be sure that Ann has copies of the presentation. But shoot me an email. I'm happy to share any of these resources with you. There we go. All right, so this is our agenda. We're going to talk about what are grant assurances, and then we're going to focus on some of the assurances that raise at least most of the legal questions that we get. Restrictions on the use of airport revenue, the airport's obligation to be financially self-sustaining, economic non-discrimination, the prohibition against granting exclusive rights to a particular aeronautical user, and preserving the airport's rights and powers. Now, this is not a complete list. It's nowhere near a complete list. There are currently 39 federal grant assurances. Again, these are the ones that where most of the questions are generated from, but there is a long list. The state grant assurances, largely overlap with some of these federal assurances we're going to talk about today. There's a couple of points of difference, and we'll highlight those for you. So what are these grant assurances? I mean, I'm sure you've been in meetings with your airport manager, lawyers, saying, yeah, we can't do that. It's those grant assurances. Can't do that under the grant assurances. I'm sure you've heard that before. So we're going to talk a little bit today about what the sort of grant assurances are that seem to, kind of put a stop to some of the things that the airport would like to do, and we're going to talk about why that's the case. Grant assurances are enforceable contractual obligation. I mean, the airport enters in to grant assurances in exchange for the receipt of federal transportation funds. So they are, just like, I wouldn't say just like any other contract, because they're a contract with the federal government for enormous amounts of money, and so it's critical that the airport complies with them. Now, many of the, I should say most of the grant assurances, which deal with airport planning and land use and some operational issues, those grant assurances are often, their lifetime is often limited to the useful life of the facility itself, the facility that the grant is being used to build or improve. Either the lifetime of the facility or 20 years. Now the grant assurances that we're talking about today, which deal with how the airport can use its money, what sort of rental rates it needs to charge, how it needs to preserve its powers, those grant assurances are perpetual, which means that once you accept a grant for a particular project, when that project is complete and the useful life of that building is over, your grant assurance remains. The compliance manual, which I cite here, the 2009 compliance manual, FAA Order 5190.6B, is a very useful document to have at hand. It's large, but sort of well outlined, so that you can find the chapters that relate to each of, well, I should say the critical grant assurances. And it's the kind of the statement of the FAA's, or the most current statement of the FAA's policy with respect to many of these grant assurances. Now, the FAA also publishes advisory circulars and program letters and different things that apply what you see in the compliance manual, sometimes help to clarify some of what might not be clear in the compliance manual, but the compliance manual is sort of the one place to go for the general statement as to the FAA's position with respect to what these grant assurances mean. So the first sort of set of assurances we're going to talk about have to do with the use of airport revenue. And in fact, most of the time I'll spend today is talking about that because it comes up a lot and it's very important. So the restrictions on what the airport can do with the money it takes in are statutory. They can be found in the U.S. Code at that site. They've also been incorporated into the grant assurances, Grant Assurance 25. And that assurance provides that airport sponsors can only use airport revenue for the capital and operating expenses of the airport, sort of what most of you have to keep in mind. You can also use airport revenue for the capital and operating expenses of other airports in the system, if there's sort of more than one airport in the system, and for other facilities which are owned or operated by the airport owner if they are directly and substantially related to the air transportation of passengers or property. So things like airport-owned parking facilities, things like that. Now, there is no statutory definition of airport revenue or operating costs, and we're going to hold that thought because the FAA has fleshed that out. But first, I want to, in addition to talking about how the airport can use its revenue, the grant assurances, I keep doing this, also tell the airport how much it sort of dictates what the airport must receive for, rental or sale of its property. This is the requirement that the airport be financially self-sustaining, which is also found in the statute and is incorporated into the grant assurances. It provides that airport sponsors must maintain a fee and rental structure for the facilities and services at the airport that will make the airport as self-sustaining as possible under existing local circumstances. So that under existing local circumstances is important, and we'll talk a little more about that. But the focus of this grant assurance is that the airport must create a fee structure, a fee and rental structure that allows the airport to be financially self-sustaining on its own, so that the municipal taxpayers don't have to carry, the airport. So self-sustaining is also not defined. So in 1999, the FAA issued a policy on revenue use, policy and procedures concerning the use of airport revenue. It's old now, 1999, but it still remains the definitive statement on the applicable rules for revenue use. It's been revised to make certain state and local aviation fuel taxes to consider that airport revenue, because that was not clear when the policy first came out. But other than that, it really hasn't even been revised. So it's still the place to go to understand what the FAA's views are with respect to appropriate use of airport revenue. The policy defines airport revenue, which again wasn't defined in the statute, and it details very importantly the permitted and prohibited uses of airport revenue. It also helps flesh out what this self-sustaining definition means. And it outlines the sanctions that an airport can face for revenue diversion, not following the revenue use rules. So we're going to talk a little bit about each of those things. So what is airport revenue? How is that defined? The easiest way to think about it is pretty much, all money's paid to the airport, all money that the airport produces. It's not just aeronautical revenues, it's also non-aeronautical revenues. I've listed many here. Really any business activities at the airport. Airport revenue also covers the sale or disposal of airport property, and that's regardless of the funding source for the property originally. So this is sometimes a point of confusion. Even if the airport owns property that was not originally purchased with federal funds or even improved with federal funds, when that property is sold, it is airport revenue. Now, if the property was purchased with federal funds or improved with federal funds, there are even more strict rules about what you can do with the proceeds of that sale. But if any property that the airport sells, these airport revenue use rules apply. And as I mentioned before, after 1987, the policy, it's been determined that aviation fuel taxes are also considered airport revenue. One thing to note that's not airport revenue, also passenger facility charges are not airport revenue. That's sort of like a special form of local revenue. But again, passenger facility charges, there's even sort of stricter rules, as you all may know, about what you can do with those funds. So let's talk about some of the permitted uses of airport revenue. These are laid out in the policy. Airport revenue can be used for the capital and operating expenses of the airport. Well, so what does that mean? Capital expenses is pretty straightforward, but operating expenses is not so straightforward. That is, the cost of services provided to the airport, both the direct costs and the indirect both direct costs and indirect costs. So the issues and questions often come up with respect to indirect costs. These are, the costs that the airport might share with other municipal departments. So the local government may contribute, finance, the finance department, the IT department, the legal department, all the local government may contribute those services to the airport. And the question becomes, well, what's it appropriate for the airport to pay for those services? Because that's a shared resource amongst the entire municipality. So the key in all of these sort of cost questions in terms of the FAA's perspective is being sure that there is a robust cost allocation plan in place. There's a plan that makes it clear as to how these shared costs are going to be paid across the various municipal departments, including the airport, and that plan is followed, of course, and that the costs are well documented. So that's key, and we're going to have another slide to talk about that. And that's often where you run into trouble, is being sure that the costs paid by the airport are well documented. Before we talk about a little more about how costs get allocated, I want to address a few of the other permitted uses. So promotion of competition at the airport, sort of some marketing expenses are considered to be operating costs of the airport. But those are, the marketing activities have to be directed to promoting competition at the airport, promoting public and industry awareness of the airport's own facilities and services, or promoting some new air service or new air carriers at the airport. And it can the airport revenue can also be used to cover sort of the administrative costs of doing that marketing. So your employee time for doing that marketing. We're going to talk about sort of the flip side of when we get to prohibited uses. We'll talk about the flip side of what's appropriate marketing and what's not appropriate marketing. So we'll just hold that thought. The airport can also pay for limited, I should have underlined that word, limited support of community activities that are directly and substantially related to the airport. So I'm sure you've all been in the situation, I've certainly had many clients in this situation, where the airport is asked for contributions to charitable or community groups, right? The FAA's policy is that any charitable contribution or community contribution should be directly and substantially related to the airport. Now, the examples they give for that are, tickets for a community luncheon where the airport director gives a speech on the current state of the airport, or contribution to a golf tournament that's been organized by a Friends of the Airport, committee. Assuming that the contribution is reasonable, the FAA says that's the sort of thing that's like directly and substantially related to the airport, right? Contribution to maybe an aviation, I'm trying to think of a couple of examples from my own clients. An aviation presentation from a museum, like in the airport, something like that. So technically that means any charitable contribution that's not directly and substantially related to the airport is inappropriate. Now, the FAA hasn't been quite that stringent. They say, look, we understand that there's an intangible benefit to being a good citizen of the community, right? So there may be situations in which that giving a donation will help increase that good standing in the community. And that's an intangible benefit. It's very hard to put a number on. The FAA says fine, but then they try to put a number on it. Fine, but it shouldn't be more than, in the range of $250. That's the one example that they give. I think the example is contribution to a job fair, where the airport is one of the many places that you can get information about jobs at the airport. So not a lot of money.
Yeah. How does this jive with the prohibition in the Massachusetts Constitution of municipalities giving contributions to nonprofit organizations?
With the prohibition in the so I mean you'd have to follow that prohibition as well. I mean if you couldn't do more than what the federal government allows you to do, but I think Massachusetts Constitution may allow you to do less than what. Yeah, right. Do you want to add something to that?
I mean, I'll just only add that, right, under the anti-aid amendment, it would still have to be a public purpose to begin with.
A public purpose, and right.
But for example, if you have a flying association that's based at your airport, I would take the Massachusetts prohibition to mean you can't give them a general contribution for their activities.
That's generally right. I mean, there'd be an anti-aid problem there in the Mass Constitution.
Yeah. So in some situations, you're right that and this isn't true in a lot of other places. The Massachusetts might be more stringent. So there are situations. I have clients with situations where under their state laws they would have a lot more flexibility, but because they're accepting federal funds,
But then you get into gray areas like dues to a chamber of commerce.
Right.
Is that permissible or is it not under the Massachusetts prohibition?
So if you're a member of the Chamber of Commerce and you receive, sort of the benefits of being a member of the Chamber of Commerce, then you could justify that. It's not, you're getting something in exchange, for that membership. It's not an outright donation. So that would be fine. This intangible benefit idea, the FAA's laid it out there, but has put cabined it pretty carefully with the $250. Now they do say, look, that doesn't mean it's not like you can give, again, if you don't have the problem under Massachusetts law, it's not like you can give only $250 once a year. They understand that you might have various small contributions, but they also caution if those small contributions begin to add up, that's something that the FAA might be skeptical of as well.
I also think, if I just jump in on this one, there's the examples they give are the $250 sponsorship of a table, and that was in 1999, a long time ago.
Yeah.
I think a lot of it relates to the impact that the airport imposes on the community. So if you have an airport like Logan, for example, that's right in the middle of these residential neighborhoods, the FAA is going to tolerate a lot more generosity by the airport in that situation, because it's just essential that the airport do everything it can to try to earn back some of the goodwill that it loses because it's a big noisy airport.
Yeah.
That argument with FAA is going to go over less well at a more rural airport that doesn't impose those kind of direct obligations on the community, because there isn't that need to try to curry goodwill in the community that they're having these environmental impacts on. There's also there's a little bit of a political dimension to this too, that it's very hard for FAA. They can say $250 in their guidance material, but I think have historically been reluctant to come down on airports and say, no, you cannot donate $5,000 to the local library fundraiser, because there's a political dimension to that too. There are calls like that from the FAA to an airport very, very quickly get a congressional representative's attention, who then calls the FAA and says, you're telling me that my airport can't give $5,000 to this good fundraiser? So they've written what they've written in the compliance manual, but there, I think, is more flexibility in it than like the terms of the document.
Well, and I think it depends a lot on, though, you have to be careful, because it depends a lot on what the particular community, and also the nature of the contribution. Right. So, there may be the types of contributions that are, for the example you gave, the library's fundraiser, the more general contributions. When you get into the sort of contributions to, I don't know, sort of, pet projects of a particular commissioner, or another board that the commissioner is on, and then you start to get, or you get requests for, various political groups, or I'm thinking of some examples of, donations to different civil rights groups and so forth. And so, you give it to one, wait, now the next request comes in, and the next request comes in, and the next request comes in. And it's kind of hard to justify at that point as just being a good citizen of the community, because this is a very sort of narrow swath of the community, and how many handouts do you need to give? I mean, that's a concern that the FAA has as well. So it's very dependent upon the particular circumstances of the area, the community, and the donation itself.
What about things like a hospital building campaign, where the hospital serves the community and the airport, obviously, is part of the basic? Would they have much problem with something like that?
I mean, that's the sort, again, the amount of the donation is going to matter, but I think that's the sort of thing where you could argue that, hey, more than 250 is justifiable here, because of the importance of that to the community. And to the airport.
I totally agree, and I think from FAA's perspective, what they're going to look at is if the airport is going to make a let's not call it $250, let's call it $5,000 donation. What the FAA would care about is that the airport brand is all over that donation. So in other words, at the dinner or whatever it is, sponsored by the Martha's Vineyard Airport Commission, and that they're actually getting some goodwill in return for that. But it's sort of a large scale community issue, right? So that's an easier justification to make. Yeah.
The biggest problem on the vineyard is the promotion of the vineyard transportation, the VTA, our bus line, which is all subsidized, is on rented property in our airport. They wanted a break. Do you think they should get a break, or they paid $1.50 a square foot, which goes in at $100,000? I don't know exactly what the rent would be, which is ridiculous. It's our taxpayers' dollars that pay for this.
Yeah. No, I mean, the FAA would say that they should be paying fair market value for that rent.
So they should pay a couple $100,000 for the privilege of keeping the buses to travel for nothing for us. That's ridiculous.
Well,
it's what the FAA would say about what the FAA would say about that is that if public funds are going to go into, if anything is going to diminish the cost to the VTA of renting that space at fair market value, it's got to be a federal transit grant.
Right.
Of some
there are other
kind,
grants available.
Another kind of funding, but we in the FAA are not in the business of providing funds to airports that are then providing land for free to transit,
Yeah.
for example.
The last permitted use on the list here, again, I'm just hitting some of the major ones, is specified costs of airport ground access projects. So if you have a situation where, you know, a rail link between public transportation and the airport, I think at the airport stop, the airport is permitted to use funds to build out kind of the airport terminal. The purpose of that is to be, you know, used by airport patrons, and that's going to be the primary use. Then it's appropriate to use airport funds for those types of cost of ground access projects. You cannot use airport funds to pay ground access towards ground access projects that are not related to getting people to and from the airport. That would not be permitted. So I want to return for a moment to cost allocation. So remember when we were talking about operating costs and what are those and how you go about allocating cost for sort of these central services that of a municipality. So your policy has to follow the OMB, the Office of Management and Budget Circular A87. So there are sort of a framework for what your policy has to look like. The key things to keep in mind are that the allocation, that the payments that the airport makes can't be disproportionate to the benefits that the airport receives, and all sort of units of government who are paying towards the cost allocation need to be treated similarly. The FAA, when we talk about sanctions, we'll talk more about this, but the FAA looks very closely at these cost allocations when evaluating whether sort of a municipal airport's revenue use is appropriate, because this is where they often find problems. And the key to satisfying the FAA that your cost allocation is appropriate is documenting the payments well. The standard of documentation is quite high, and I think this would be, and when I say FAA, I'm, DOT, we're talking about these revenue use rules apply across the board, right? So the standards of documentation is pretty rigid. I mean, they want to see detail, ledger entries, journals, if it's payment for police services, they want to see the time slips. And one thing which folks don't always know is that just budgeted costs, and relying on the budgeted costs alone isn't sufficient. There has to be sort of a true up at the end of the fiscal year to show what the actual costs were, and that the cost allocations are consistent with what the actual costs show.
So if there's that true up, it's okay for them, as they do in our case, right at the beginning of the fiscal year, go in and charge the amount for the whole year.
Yes, you can do that as long as there's a true up at the end. Yep. So let's talk about prohibited uses. Some of these are the other side of the coin of the permitted uses. Where the payment that the airport makes for the essential services, for example, or even any direct services, when the payment exceeds the value, the payment exceeds the value of the services, or it's inconsistent with the cost allocation plan, of course, that's a prohibited use. General economic development. Now, this is key. I mean, the sort of the takeaway from prohibited costs is you can't funnel money to other municipal units. Like that's kind of how that's how it boils down for this group. So one way is the cost allocation plan. Another example of that is it's not appropriate to use airport revenue for general economic development. So you know, essentially you can't subsidize a cost that's important to the community. Now, if it's unrelated, or I should say, if it's not directly and substantially related to the airport. Now, there are, you know, again, being a good citizen is one thing, and there's a little bit of room, we talked about in some of the, in terms of donations and so forth, to be a good citizen. Certainly there's room if there are, you know, benefits that can be given to the community that are somehow directly and substantially related to the operation of the airport. You can pay for those. But if you can't show that direct and substantial relationship, you can't fund general economic development plans. So, you know, there are I'm sure my colleagues here could think of all kinds of examples. You know, helping to fund the new community recreation facility, helping to fund the homeless shelter, helping to fund the new library. And those are not directly and substantially related to airport operations, and so they're not a permissible use of airport revenue.
On that one,
and this comes up also in the self-sustaining clause, but you know, oftentimes airports will hear arguments from local elected officials like, you know what, it's really important that we give this company who's thinking about locating here or thinking about expanding here a really good deal on the rent, because after all, it's 150 jobs and they're good paying jobs and all of that. And it's incredibly tempting because it sounds like a wonderful idea. But you know, we can tell you that FAA's view is no, that, you know, if somebody's going to help underwrite the cost of their leasehold, it's not going to be the airport. They've got to look somewhere else for funding. But it's a constant pressure point. Local electeds going to an airport saying, make this thing happen. It's wonderful for the community. And you can get into trouble with it.
Yeah. Yeah, and that does come up in the self-sustaining clause too, which we'll talk a little more about. Similarly, this destination marketing, you know, when we talked earlier about what kind of marketing costs are acceptable, you know, destination marketing where the marketing effort is, you know, come, you know, visit Martha's Vineyard this summer, you know, Hyannis, Gateway to the Cape, you know, there's some sort of, you know, big marketing push, and they say, well, can the airport contribute to this? If the airport is not a predominant part of that marketing, if it doesn't appear predominantly in the marketing materials and the marketing plan, the airport can't contribute to that marketing effort. So again, there are ways to be involved. You can be sure that the airport features predominantly in the materials, that the amount that the airport contributes isn't disproportionate to how much the airport is featured in the materials, and then that's fine. But you know, I had one example that comes to mind at a fairly large city is, you know, they're having a international trade group, you know, visiting the city to encourage internet trade from Asia, for example, and there's all various community groups and business groups involved, and the airport features in the materials, but they want the airport to pay like 50% of the trade, you know, this trade organization's efforts. That's not going to be acceptable to FAA. So you really have to balance what sort of promotional benefit the airport is getting and make sure that the airport is featured. Yes?
So, like, for example, let's say, I would imagine something that might be permitted would be putting an ad in some aviation magazine saying, come visit Chatham Airport, you know.
Absolutely.
You got a great
Full
restaurant,
cost of
you
that.
know,
Full
and so
cost
forth.
of that.
That would be something that would be okay because you're directly advertising the airport and to general aviation flyers.
That's right. Absolutely.
Or honestly, come to Chatham and then a logo of the airport
Yes.
with a, boy, it's really easy to get here.
Yeah.
That kind of a thing.
Yeah, you could contribute I think a pretty substantial, you know, amount to that, right? But you'd be, or maybe, I mean, there are many situations where, you know, the various groups, community groups, municipality just want the airport to pitch in for what's really just general marketing, destination marketing, with really no reference to the airport or a very small reference to the airport. Then you have to be careful about how much you're contributing. the airline subsidies versus waivers. So airline subsidies are a prohibited use. That's meaning cash in exchange for new service to a particular destination, right? That is not allowed. That's one pretty clear black and white line. What's not so black and white is, what constitutes a subsidy? Well, the FAA has said pretty clearly in its guidance documents that you can give waivers of fees and rents to airlines in order to encourage them to bring new service to the airport. FAA has its air carrier incentive policy. The final was published in 2012, I believe. And we could have a whole presentation on the air carrier incentive policy. It's pretty detailed, and there's actually quite a bit of sort of flexibility in there. But the takeaways from it are, well, no subsidies, no direct payments in exchange for service. An incentive offered must be available to all carriers willing to provide the same type and the same level of service. So you can't choose who you're going to give it to. There are some different standards in what kinds of incentives are appropriate for incumbent air carriers versus new air carriers that are just coming to the airport. So you've got to be aware of some of sort of the different things you can do with respect to each of those kind of carriers. No incentive can last more than 24 months. So, but remember, because the whole goal is to encourage a new service and to see if it can sustain itself. You can't sustain it. The airport can't help to sustain it forever. And for this group, I think it's important to know that incentives for seasonal service is okay. That wasn't clear for a long time, but incentives for seasonal service is okay, provided that the same seasonal service hasn't been offered in the recent few years. The idea being and seasonal service isn't new just because it stops for 9 months and then it starts up again, right? If it worked last year and the year before, it's not a new service anymore. Again, there's a lot to say about incentives, and we advise a lot of our clients on those issues. So I would refer you to the policy. I'd be happy to give it to you, but there's a lot of gray area there. So it's certainly something if you're interested in, you should give us a call. It can be a little unclear. This is what Dave was referring to. It's prohibited to lease non-aeronautical land at less than fair market value. So you can't have, and we'll talk about aeronautical land in a minute, but we've seen lots of situations where the airport is pushed to, bring this business into the community. It's going to create all of these jobs, give them a cut rate rent. That's clearly not permissible under FAA guidance. Let me go to the next slide. And that links up with the self-sustaining obligation to charge non-aeronautical use fair market value. And to be clear again, this is true of all tenants. So, it's true of municipal units of government, have to pay fair market value for non-aeronautical purposes, commercial and non-commercial tenants. Now, for aeronautical use, the rule is different. The FAA says that airports have to pay at least cost in almost all circumstances. You have to pay at least cost, but preferably fair market value if it can support that.
What's an example?
So an example of an aeronautical use that pays cost or fair market value. So any aeronautical use. So if you're leasing out a hangar space, you have to charge at least cost. Any FBO services, other aeronautical services, whether they need, regardless of the amount of space that they need, whether they need an entire hangar or they're looking just to lease a small, part of the smaller space on the airport. I mean, in aeronautical use, you don't have to charge fair market value if you can't get it, but you have to charge at least cost. The idea being, again, that the airport has promised that it will make every effort to be self-sustaining. So if the airport is entering into deals where it's not even recovering its costs, the FAA would view that as inconsistent with its obligation to be self-sustaining. By the same token, if you're able to get higher than cost as a rental rate, the FAA would say, well, then in order to be self-sustaining, you should be, getting the best deal that you can for the airport, right? So if you're able to charge, if the market is there to charge at rates higher than cost, the FAA encourages, I think I'd say the same for DOT, encourages airports to do that.
Along the lines of an airport mechanic or airport plane cleaning company, that's aeronautical use.
Yes.
They can get a break in the rent.
They should be paying at least cost. So again, they don't have to pay fair market value, but they should be paying at least cost. Yeah. Mm-hmm.
So how do you determine cost? Let's say somebody wants to put a truck, or like a food truck on airport property. There must be some way of determining.
Well, a food truck. I mean, that's non-aeronautical.
Right. Okay, that's
Yeah.
that example. But you wanted to have a
Paint airplanes.
electronic inspection, or some kind of a avionics service or something like that, and he needs a little piece of land, and he's gonna maybe lease or put something on there.
So you have to determine the cost to the airport. Well, it depends on the facility. So I mean, if they're leasing space in a facility,
It's just space they're leasing.
yeah, if they're leasing space in in an airport, say a facility that's being serviced by debt at the moment, for example. I mean, the airport's got to be sure that it's equal to whatever debt the airport's paying with respect to that facility, whatever other sort of maintenance and upkeep costs that the airport has with respect to that facility or piece of property. This is true whether it's a facility or real property. And either way, it's got to be enough to reimburse the airport for all of the airport's costs associated with owning or servicing the debt or maintaining that property.
Yeah, just jump in for a second, one of the ways that I've seen this requirement applied is that if say you have an existing tenant and they want to expand their space, it's an FBO, for example, and they'd like to they've got one hangar, they want to build a couple more, but that's going to impose, the increased size of their fleet's going to impose some additional costs on the airport in terms of, snow removal, heat, utilities, security staff, fencing, that kind of thing. And what the FAA would say about that is, look, if you can't get to fair market value for that, at least make sure that this additional space they're leasing doesn't drive the airport even further into a deficit situation than it already is. In other words, this incremental space that this aeronautical provider is going to use can't make the airport worse off than it was before the new lease was done. And it's not, they're kind of crude measures, I admit, but that's one way to think about it. Does doing this deal with this tenant actually make us worse off financially? And if the answer to that is yes, then you should restructure the deal.
Right.
I just have a question about what the meaning of self-sustaining is, in the sense that, some people would argue, well, if you're taking money from the federal government, $1 million to upgrade your taxiway, then, to be self-sustaining, would you have to say, well, I don't need that money, I can just fund it myself? Where, how does that work with capital programs and the, capital improvement plan of airports and so forth? Because, I know, like, for example, in my community, you'll find people, You know, if we get 95% funding for something and 5%, you know, has to come out of, you know, perhaps out of the, you know, the taxes, you know, that's, you know, why should we be spending that money? And, you know, we're not being self-sustaining, et cetera. So what, you know, what is the, you know, FAA's understanding of what self-sustaining means in that context of operational versus capital needs?
Yeah, I mean, there's not the expectation that that the airport's no longer going to need some grant funding or any of that. But the idea is that the airport, well, a good example here is, you know, that the airport doesn't have to be sort of subsidized by, you know, the municipal units of government. That the airport can sort of carry its own costs. That, remember, there are many, you know, that the airport revenue the airport brings in can sustain the costs of the airport. Again, you get grant funding and so forth for various particular purposes, right? But there are lots of airport costs that have to be met and sustained through the airport revenue that comes in, you know, apart from any grant funds. So the idea being that revenue would ultimately sustain all of the costs of the airport. And I'm sorry, was there another?
I just wanted to add that that includes the local share of the grant funding.
Yeah, that's right, right. So the self-sustaining, the self-sustaining assurance, I think the key thing to keep in mind is that while the FAA recognizes it's important to attract, you know, service and so forth, it's also important for the airport to be able to meet its own costs, and it's a goal towards doing that. So if it doesn't happen, it doesn't mean that you're in violation of your grant assurances. But the grant assurance says that these decisions that the airport makes about how much money it requires in order to allow use of its facilities and services and how it uses its money are important to reaching the point that the airport can be self-sustaining, even if it doesn't happen, right? And so it's the FAA is concerned about the choices that get made in furtherance of that goal, right?
I mean,
yeah.
You know, with respect to that, I can say that you know, the idea of self-sustaining, that's sort of like a big topic, in the town, and one way of, making the airport self-sustaining, in the case of Chatham, it's argued, by, certain, folks is, well, we should charge, a landing fee to all those rich pilots, that come into town. Could easily make up, because right now, I think, in the specific case of Chatham, I don't think we're quite there, almost there in terms of just operating costs, but, not quite. And occasionally, we have to, ask for $100,000 for the town to repair the ancient administration building that we have.
Right.
Owned by the town, but still it's airport related.
Right.
And we've resisted that, A, because it's a practice for most smaller airports not to charge landing fees, and B, we basically, or my understanding is that if we, if we charged a $20 landing fee for the sake of argument, we could make some money, but we would reduce the overall number of
Absolutely.
Landings and operations significantly, and therefore actually hurt the town by decreasing the economic, the positive economic impact that the airport has. But how do you, factor and weigh all these things? I mean, it's a complex equation, and I've never heard anybody, of the airport opponents, say that, oh yeah, if we charge a lot of money, we would increase traffic. It's just supply and demand. It doesn't work that way. But,
well, you're right. It is a complicated balance, but I think it's one that the regulators, they recognize. I mean, that's what I think that's the takeaway, is they recognize that that's the balance that you're trying to strike. What can you feasibly charge and take in for the airport while still offering the services to the public and actually not being counterproductive by driving people away. And so that's recognized as part of the self-sustaining assurance. It doesn't give you the answer, right, to how you balance it, but it is recognized that, in fact, and when I think I started by saying, self-sustaining given the local circumstances of the airport. Like, that's why that language is there. That's a very important piece of the assurance, is that it's going to vary depending on all of those factors. Also, I'd said that, almost always or typically, you have to get at least cost for aeronautical uses. But if you are in a situation, for example, where you're a desperately underserved airport and you need to bring business to the airport, you need to bring aeronautical services to the airport so that it can carry out its function, you're gonna have an argument to the FAA. Well, I've got to charge less than cost in order to do that. You're gonna have to be able to tangibly back that argument up, right? You can't just say that and expect them to accept it, but but the regulators understand that that's a balance everyone's trying to strike. So let's talk about enforcement for a moment. I think that's next. Yeah. So the revenue use policy outlines the various enforcement mechanisms and possible sanctions. I mentioned before that the way that the FAA often can identify revenue use problems, issues.
Can I interrupt you for 1 second? Patriots just scored a touchdown.
Ah, there you go. So no one has to leave to check it out. Thank you. Yes. I know, more of those interruptions, please. Various forms that the airport submits, on the federal side, it's the forms 125, 126. They lay out what payments are being made to the other units of government. The FAA and the Inspector General, if it gets to that point, look at those forms very carefully to see what the other units of government are being paid. That's one way that enforcement actions could be initiated. The third parties can file Part 13 or Part 16. This is 14 CFR Part 13 or 16 complaints with the FAA. That's Part 13 is sort of an informal complaint to the FAA regarding grant assurance violations on the part of the airport. Part 16 is a formal process by which a complaint is filed with respect to a grant assurance violation. The sanctions for unlawful revenue use can be quite severe. It includes, let me step back for a minute. If the FAA discovers unlawful revenue use and the airport sponsor, doesn't correct it to the FAA's satisfaction, then it can result in loss of future airport improvement program grants. It can result in withholding payments under current grants. It can result in failure to approve PFC applications. The government can file suit in federal court for civil penalties. Again, there are opportunities to correct violations, and I probably don't need to tell you that you should carefully take those opportunities and correct those violations to the FAA's satisfaction. But if for some reason you're not able to do that, there are severe penalties. Also, it's important for this audience to know that often the corrective action required is to get the money back from whatever municipal unit was given the money. This is one thing. It could be helpful for you to, if you've got the town coming to you asking for funds for something which is, you're pretty sure can't be covered by airport revenue. And you say, we realize the result of this. This might be a gray area, but if the regulators disagree here, you're going to be paying back the money. there is no private right of action in federal court by a third party for a grant assurance violation. So a third party, a tenant can't go to court and sue you for a grant assurance violation under the contract, right, under your grant. They have to bring that to the FAA. But my colleagues have all seen situations where creative litigants try to transform grant assurance alleged violations into other types of lawsuits. So my client, Barnstable, many years ago, its commissioners on an individual basis were sued by an FBO for RICO. They were alleged to be RICO conspirators for essentially what they said were violating grant assurances, not allowing FBOs to sell jet fuel at the airport. Ultimately, we won that case at the trial court and at the appellate court, but it was several years of litigation, and the commissioners were drawn into that. The Justice Department, in at least a few cases, has pursued False Claims Act cases against some pretty small airports for what they alleged were false statements on grant applications due to saying you complied with the grant assurances when in fact you did not. So there are, the lesson here, having the regulators, the FAA, the OIG, showing up at the airport is bad enough, but it doesn't necessarily end there. There are, again, always creative litigants out there who might find other ways to assert these kinds of violations. So we're going to move away. Yeah.
Just one
Yes.
thing on the revenue self-sustaining thing. That just step back for a second, because you've heard all of the different things you can't do with revenue, and they're all complicated in their own way. But you might be asking yourself, why does FAA care so much about this? And just to put some of this in context, they're in FAA's view, is protecting both a local interest and a federal interest. The local interest that FAA views itself as protecting is just the financial health of the airport.
Mm-hmm.
The airports can't be subject to political attack from your sponsoring municipality. Hey, give us your money because we have greater needs for the library or city hall than we do for the airport. So it does that. And then from FAA's federal view, a unique thing about airports is that many, depending on the size of the airport, many, if not most of the users are from out of state. So it's incredibly tempting for a local unit of government to direct its airport to move money off the airport and then have users of the airport sort of fill in the financial hole. Because those users at the airport, they don't vote there,
Mm-hmm.
they don't have a voice, and it's just this way of, basically indirectly taxing consumers of airport services in a way that is kind of offensive to the fact that we're all one nation here and shouldn't be doing that. And then there's this third issue that I think is also important, and Melissa touched on this with respect to grants, as the question got to this. FAA spends billions of dollars a year providing federal grant money to airports for airport purposes. And they don't want to see airports basically enhancing their need for federal grant money because they're taking their own revenues and sending them out the back door to fund the library or whatever nice local need they need to fill. So, there's a reason why they're doing it. It's not just kind of these technical things that bureaucrats like to enforce. They really view it as fundamental to the financial health and safety of these facilities.
Clarification on revenue. In all, we lease the property to hangars, tenants. They own the building,
Mm-hmm.
and then they pay taxes to the Treasury's office.
Mm-hmm.
Is that airport revenue?
The taxes to the treasurer's office, no.
That's not airport revenue. Okay.
No.
Now, if the city decided, we're going to have a tax, same kind of tax, we're actually only going to enforce it against airport tenants.
Yeah,
that would be airport.
That would be airport
Yeah.
revenue.
But if it's a tax of
Regular
That
real estate
happens to apply to a facility on the airport, but it applies to all of those types of facilities anywhere, then it's not airport revenue. Okay, so I'm happy to answer any other revenue questions if they come up, but we're going to move on to a different grant assurance, economic non-discrimination. So this is the rule basically that an airport has to make the airport available to all types of aeronautical activities, and you can't treat similar aeronautical activities differently. It's pretty much what it comes down to. So the grant assurance says you have to provide fair and reasonable terms for any aeronautical activity, and you can't unjustly discriminate. That's where another way to think of it is if you're going to treat similar groups differently, or there has to be a legitimate reason for treating two aeronautical users differently. So some examples, that have come up a lot, are with FBOs. So FBOs, cause all kinds of issues at airports. But here, there are often situations where it's appropriate to treat two FBOs differently, right? A difference in a rental rate could be justified by the fact that one FBO has financed its own facility, right? And another FBO is leasing, an airport facility. That would be a valid reason to treat them differently. One FBO might be in sort of a prime location at the airport, which would justify a higher rent, where another one might be more off the beaten track. Obviously, some FBOs might offer more services than another FBO, so it might be more desirable to bring them into the airport and give them a better rate because of the higher level of service that they provide. So that's in that case, they're not the same. There's something different about the two FBOs that allow you to treat them differently. Terminal rents is another place where this comes up a lot. The debt that the airport is servicing at one particular terminal versus another, or one area of the terminal versus another, depending upon improvements and so forth, that may justify treating tenants in one terminal or one part of a terminal differently in terms of their rates than others. The physical layout of the terminal, prime locations versus less than prime locations would be another reason, not the same. Now there's a legitimate reason to treat them differently. It comes down to a pretty fact-specific inquiry about, and it's kind of intuitive in a lot of ways. Like, would there be a reason, a legitimate reason to give one service provider a better rate than another? Hand in hand with economic non-discrimination, you often see exclusive rights, questions of granting aeronautical providers exclusive rights. So the grant assurance says that an airport can't give an exclusive right to a third party to provide an aeronautical service. You can't allow, one party to be the one, aircraft washing facility, right? Or if somebody else wants to do it and you have the need for more than one. I mean, there are a couple of exceptions to that rule which are sort of recognized in the grant assurance. One is the exception for a single FBO in certain circumstances. Again, because FBOs can be very litigious and raise lots of issues with the FAA. They've made it clear that in some cases it's appropriate for an airport to conclude that it should have one FBO, and that's not granting an exclusive right. The rationale for that is when having more than one FBO would be unreasonably burdensome or costly for the airport. Or it simply can't justify more than one FBO. The services aren't needed. The other reason that it would be appropriate to limit your airport, will have one FBO on the airport, would be if allowing more than one would require the airport to renegotiate an agreement with its existing FBO. So for example, the only way you could provide a second FBO with space to operate would be by renegotiating with an existing FBO. You know, the regulators don't require you to do that. And so if you're in those situations, you can justifiably say, we're sticking with one FBO. The other side, you know, of this coin, though, is you can't allow a single aeronautical provider to sort of lock up the land at the airport, right? So that you can get yourself to the point where you say, oh, well, we have no more space to give you because you've allowed an aeronautical provider to lock up the land. So what that means is you can't grant overly long sort of options on land to aeronautical providers. You can't grant extensive sort of rights of first refusal to aeronautical providers, such that you would find yourself in the position of not having sufficient land to offer to other aeronautical users if they should show an interest in coming to your airport. Now, even though you have to make the airport available to all aeronautical users, it doesn't mean that you can't restrict areas where they can operate, that you can't impose rules on their operation. Again, when tenants at the airport challenge the airport's actions under this grant assurance and under the economic non-discrimination assurance, you often hear them saying, you can't tell me where to lease my property. I want it over here. You can't tell me where I can fuel these planes. I want to do it here. You can impose those kind of restrictions. The FAA has said, you can impose restrictions for safety, obviously, but they're going to look carefully at, whether it's really necessary for safety, but provided that it is, you can impose safety restrictions. You can just, as sort of for efficiency purposes, you can determine where particular activities need to happen at the airport. So you can do the no fueling there, no aircraft painting in that area. And if the space is taken, you can argue the space is taken as long as there's a good reason that you can't do it in other areas of the airport. So you do have flexibility to create, reasonable restrictions on where things can take place. The best way to try to avoid exclusive rights type challenges is to be sure that you have minimum standards for commercial services in place at your airport, that there are reasonable minimum standards, that you've given stakeholders an opportunity to comment on the minimum standards, and then that you actually apply the minimum standards in all situations that they apply, because then you've got your backstop, right? You've got your document you can point to and say, we told you what the rules were, you commented on them, and we've applied them. Another exception to the exclusive rights, an important exception to the exclusive rights assurance, is that the airport itself may exercise an exclusive right, what they call a proprietary exclusive right. So again, I was talking about the litigation for my client in Barnstable, was all about the airport exercising an exclusive right to sell jet fuel. The airport said, we're the only entity here that's going to sell jet fuel. That was ultimately, it had always been approved by the FAA, it was upheld by the courts. If the airport decides to exercise an exclusive right, there are two rules that apply. The airport has to use its own employees and resources to do that. So you can't use a third party, and by the same token, you can't require aeronautical users to use some third party to do something. It has to be the airport's own employees and resources. That was a very quick run through economic non-discrimination and exclusive rights. Are there any more questions on those? Because there's one last thing we want to talk about. Yes?
By using the word airport's own employees and resources, you mean people employed by the airport manager I mean, or does the commission direct, the commission doesn't directly employ them?
People employed by the airport. So yeah, the airport manager would presumably be responsible for the hiring and all that. So in the fueling case, which is the one that I was used as an example, so the airport has its own fuel, hires its own airport fueling staff, or the airport staff, they do other things as well, but they do the fueling, has its own fueling trucks, has all of that, right? You can't bring in third parties to do any of it. All right. So this is just to say the same sanctions that we talked about with respect to revenue diversion and the same enforcement practices apply to all grant assurances, including the ones that we just discussed. So preserving rights and powers, this is just the last assurance we want to talk about quickly today because it's another important one. So the airport sponsor must not take any action that undermines its ability to comply with its grant assurances. So the key examples of that are, an airport cannot allow the municipal entity, the municipal sponsor, to interfere or sort of dictate what the airport's operations and policies and so forth will be. And this is one place, Dave, you can talk more about if you want, where the state grant assurances are even more explicit on this point than the federal grant assurance. Dave, did you want to talk a little bit about that?
Well, I'd say, yeah, in this one, there's a broad federal grant assurance that requires the airport to maintain its rights and powers to fulfill their grant assurances. The state grant assurances are much more specific and pointed, and basically, require the municipal sponsor to promise that it won't interfere with the management or operation of the airport. And furthermore, they require the airport commission to take what is referred to in these grant assurances as prompt action to stop any attempted acts of interference with airport operations.
Dave, how does this relate to the maintenance of the airport's financial records?
Well,
Is that part of the operation of the airport?
well, I think it sort of depends on interfere. Now, it doesn't mean the municipal sponsor can't be involved.
Right.
So, for example, Melissa describes some scenarios where, for example, you may use IT staff, HR staff, financial staff of the municipal sponsor to perform some work for you, pay them for that service. But, there's enormous difference between that, for example, and having the Board of Selectmen say to you, you're paying your airport manager way too much, and it's really not consistent with our pay scale here, and you need to crank that down.
Well, I'm thinking of, in our case, until, well, it's still true, but circumstances have changed. The airport kept all the capital account records and did not share them with the airport.
You mean the town?
The town capital. And, on the theory that there was their duty with respect to the bondholders and so forth to do this, since they were theoretically on the hook. As you know, we're in a discussion now about how much is owed the FAA. I mean, it owed the town from way back when. And a lot of that was because of I'd like to say questionable, but I'm sure I should, practices of the town in terms of maintaining the capital account records.
Well, I mean, I guess I would say, maintaining records is one thing, but interfering with your ability to make the point that you need to make to resolve this controversy, to me, sounds like interference in a way that's damaging to you.
Talk more.
Yeah. Does that sound right to you?
No, that's right. I mean, if you're, first of all, with any, leaving aside the airport world, if it was any sort of enterprise within a town, and the town was telling the entity running the enterprise, we can't tell you how they're kept.
Yeah.
I want to know a very good reason why those records have to stay confidential to that part of the town or the other, because they're probably anybody in the public can see them. Second of all, when you start getting to the FAA piece, FAA also has some right to inspect those records,
Right.
see those records. That's when it started.
That's what I was thinking. If, for example, you couldn't comply with your obligations to provide records for inspection. So that would be a real problem. Now, as Dave said, just some other unit of government controlling them or maintaining them, that's one thing, but not giving access.
Controlling them and
Yeah.
maintaining them are two different things.
Well, yeah, well, I should say, I'm saying preparing them, right, and maintaining them, but not giving access to them when
Really not being
often,
able to give
When you need
access.
them.
yeah, when you need them, I
Not
think
being able
is
to
a
give
real
access.
problem. Yeah, I think that would be a problem.
I'm sorry?
Aren't they public records?
That's with Mina's point. They'd be
Yeah.
public records. I think
Full error
anybody in town could get access to them. They should be able to. Right. So another example of way in which you're expected to preserve the airport's rights and powers is to include subordination clauses in airport agreements. So that means all of your agreements should include clauses which say if there's any conflict between this agreement and the federal and state grant assurances, the grant assurances take precedence. There's FAA and I believe DOT policy which says your agreements need to include that, right? That's kind of not optional. And then finally, the airport is expected to retain property it needs in order to comply with whatever its sort of master plan is, in order to ensure that it can provide the aeronautical services it intends to provide during the course of its, the master plan. Along with that, airports are expected to seek approval for disposal of any airport property that appears on Exhibit A of the ALP. This is often overlooked. And Jennifer, our colleague, is going to get into, I think, a little bit of it tomorrow in legal pitfalls, precisely because it's often overlooked. But that's considered necessary in order to comply with your rights and powers, the rights and powers assurance that the FAA needs to agree to disposal of airport property. And we've talked about the difference, and I think that covers our sort of speed through grant assurances. Are there any final questions before we wrap up?
I might just point out that the Vineyard Airport was very much involved in this whole situation, when was it, 3-4 years ago? When the county, who was our sponsor, attempted, one, to tell us, and I wasn't a commissioner at the time, tell us what the pay scales of the airport employees were supposed to be, and then subsequently also did what I would call a FDR, stuff the court move of attempting to increase the number of commissioners from 7 to 9. And courts, and that was the Superior Court, I believe, that came down, very firmly supporting the airport in that case.
That's a good example of that. All right.